Alright everyone, welcome to this video. In this very video I'll be explaining candlestick theory. Like, I'll be teaching you guys how the candlestick form in the forex market. So mind you, this video is strictly for beginners. Those of you that already know about candlestick, those that are not beginners must have already know about candlestick. So this video is for beginners. So as you guys can see, I'm at the 4-hour time frame. So this is the 30 minutes, 1 hour, 4 hour. This is the 4 hour. I'm in the 4-hour time frame. So meaning it takes 4 hours. Meaning it takes 1 hour for one 4-hour candlestick to form. So this is what I mean. This candlestick forming right here now is going to be, let's say this previous one that formed is going to be a 4 candlestick in the 1 hour. Let's check it out. This particular one. Okay, wait. It's going to be a, I need to edit this thing for me, guys. Okay, you know what, let me just use this to indicate it. So come on, why is this thing like this? Let me check if I can get this with it by checking the time. Okay, you know what? Let's just get into understanding the candlestick theory first. Then I'll get back to this. I'm trying to feel. Maybe I'll use 1 minute, for example, to teach you guys that part, that theoretical part. So this is like, let's say this is a candlestick, for example. So let's say market open right here. Market open at this price, right? Then they started buying. I'm showing you guys, let's say, assuming for this is a 4-hour candlestick now. Then started buying. This is what it's going to be doing. It's going to be going up, moving up, moving up. It's buying. So in my chart now, buy is white, sell is in this golden color. So started buying up. Then maybe wherever it bought to is where it's going to get to. So the price it bought to is where it's going to get to. So let's assume that then it bought to that point. Sorry. Then it started moving down. It didn't close at that point. You get, before the 4 hours ended, it didn't close there. Its sellers also pressured, push the price down, then close at this point. This is how the chart is going to look like. This is where it opened from. This is where the highest point. This is the highest point it got to, and then this is where it closed. Meaning that this is the price it was when that 4 hours time frame ended. Like 4 hours means, let's say market open right here by 6 a.m. The candle will open right here 6 7, 8, 9, 10. You get? So it will take 10 from 6 to 10 from this candlestick to form 6 a.m. to 10 a.m. because it has to take 4 hours for the one candlestick to form. So that is what it actually means. It means that in that period, this is what happened. This is what transpired. So let's say assume that it now went up down first. When it opened, it went down to this price first. You get? So let's say it opened from here now. This is how it's gonna look like. Let's say assuming like it just opened first. This is how it's gonna look like, right? Then it went down. It's gonna be red initially, because selling is actually red, while buying in my chart, selling is the golden color, buying is the white color. Or maybe you are using the basic chart that you just see when you just install the trading view. So I'm the one that edited the color, so you see buy as green and sell as red. So like this, for example, the market open right here and sold, and it's going to set, let's say it's sold to this point, it's going to be red initially. Let's say by 6, around 6 it was still at this point, then 7, it was now 7 a.m. It's going to, this candlestick will still be open because it will take 10 hours before it closes for another candlestick to form. So then it started buying. It from this point now, if it got to this point and they started buying, that point that they have got to, that is now reversing from, it's going to be a week. It's going to be a week because it has to show that the price actually got to that point. So if there's no week, it means that market did not get to there and market did get to there. So there has to be something that to indicate that price got to that point before it rejected. So that is why week, you always see weak in the market. So if you now started buying, remember it was red because sellers move it went below the opening price. So if it don't go up now below above the opening price, it's going to turn to green candle because they are not buying. In my chart, it's going to be white. So it's going to turn to green candle, then buy wherever it gets to. Let's see now buy to here. Sorry guys, the network is actually disturbing me. Sorry about this. So whenever it gets to it's going to actually be the full body of the candle. So if you not go below the price they have got into, it's just gonna not, it's not going to be weak. So you just understand that wherever price have got to, if price now reverse, move away from that point, there must be something to indicate that market have gotten there. That's why, and that thing is weak. That's why weak always form to indicate that price got to that point before let's say in this case before sellers push it down. So it now close here. So this is how it's going to be. So let's say it close here. So this is it. So what happened now with this candlestick? You open by 6 at this point. First of all, before you opens, okay, you know what, let me use continuous candlestick to show you guys. I'll explain something, but I'll explain with the next candlestick. So you opened at this point, right? Meaning the opening point. You went to this price. That is the lowest point it got to. Then it now move above again and got to this price. That is the highest price it got to, and then it closed right here. You get this? Meaning this is the price it closed, the body of the candle. Okay, let me indicate this thing. I don't know if I can make where is this tool safe? I wanted to indicate all these names on that point, so I don't know. I'm trying to get it. Sorry guys, give me a moment, let me find this thing out. I don't really use all these tools, so I don't know. Man. Okay, I just want you guys to know that this, okay, let me try this. This was the closure of the close price, where price actually close. Opening price right here. This point is the opening price. This was the opening price right here. That points. The lowest price, meaning the lowest that price got to, the lowest price that the price got to, the lowest price is here, and then the highest price right here. The highest price. So this is just it. You see the opening was here, the lowest it got to is here, the highest was here, and the close price is here. So let me not say let me bring this stuff to this side so I can show you guys the next opening candle. Okay, let's see. So remember, this was our closing price. So means that this is where the next candle will open, right? It means this is the price that market it got to before the next candle open. So remember, this price is just like a transaction. So they are actually buying moving price upward. So all this candlestick theory is not really difficult for you to understand. So if this was the closing price, means that the next candlestick should open from this price, right? So again, same thing again. If the next candlestick open right like this, like I said, and the market move lower than the previous price, it's going to be red, right? Wherever it got to is the lowest price. You get the lowest it got to is its lowest price. The higher, so if you now start going again, move above the high, the higher it got to, the highest it got to is the highest price. You get. So let's assume that market open, it moved this far. If first of all move down, sometimes it doesn't even move down. So it might not move to the low price. I'll show you an example of that. The market might not move to lower than the opening price. It will just start going up. So in some scenario it does that. So in this scenario, let's say it moved lower, it moved lower than the opening price. So it went down to this point, then it started going up again. So started going up again, it moved. So market in a bullish trend, for example, started going like this, started going, then moved to this highest point, then it now moved down a little. It might just decide to close at the highest point. There will be no wick. Same thing here, it might decide not to go to the lowest, move lower than the opening price. There will be no wick. So in this scenario, let's say it it just moved like, okay, since I already show you guys where it closed and it come down, so let's assume this point it closed at the price it got to, the highest price it got to. There is no wick, right? It closed there. So let us assume it only came down. So if something like this can form now, but market really form this kind of candlestick, then there will be no wick. It really occur, but let's assume that it forms. If it close at that price, there will be no wick. So if it's only scenario whereby you move lower than the opening price, so let me just put it there because I already show you guys where it actually moved down. So now in this scenario, now this will be the close price. Sorry guys, let me just copy and paste it. This is the close price. Just same thing with this one. This was the close price. So this one it closed at the highest point. This one it closed lower than the highest point. That's why the wick indicates the highest point. Then this point here is the body of the candle. This one right here is the body. And maybe I should also indicate that. This will be called the body. This will be the wick. Wick. This area is the wick. So you get, so that is the wick, the lowest price, the opening, the close price, the body. So that just is about candle theory. So like this guy right here now is just an example of what I said. This was the opening price. So I will remove all. I hope you guys have noted this. You can take a screenshot of this to understand it more better. But just understand this is the highest price, the close where it closed, the opening where it opened, the lowest price it got to. So example is this one right here. This was the opening price. Remember, this was the bullish. The previous candle was bullish. So the previous candle opens right here. We move down to this lowest. That is example of what I just did. It opens, you move to this lowest, then you now move above. Exactly, you move above. Moving above means that it will indicate wick. Only wick will not be there, showing that price have actually moved below that price. Price have actually moved below that price. That's why the wick is there. Then you now move above. Then what happened? It went to this highest point. Then let me zoom in so that you guys can see it more. You see what I'm saying? It opened right here. Same thing is just an example of this that I did. This one, it opens right here. This one opens right there. It moved to this price, the lowest price, which is this. Then it now started moving above, it going above. So this lowest price they have got to, it will be a wick. It will just indicate, it will be indicated with a wick. Then it now went this far, then it come down and close below here. So this is exactly what I did. Move this far, come down and close below here. So let me just indicate it. Lowest price, opening price, close price, and then the highest. That small wick is the highest. You can see it. That small. This is the highest price it got to. So since with this next bearish candle that form, it's very simple and understandable. So this one, since this one closed here, means that the next candle will open. So already know that wherever the previous candle closed is where the next candle will open from. So this one closes here, this one opens here, and then what happens? This one goes above at this point, it went up to this point, and then close at this point. You can see right here, this one close right here. By the way, if you are new to my channel, please do well to subscribe and turn on the notification bell, and also so that you can get notified whenever I drop more content like this. And also, if you have any question, you can type in the comment section, and I will always do a clarification video for you guys. So like I was saying, this was the opening price. Market went to this price and then came down and closed below here. Sorry, it came down and went below the opening price, and then it moved down to this lowest. This is the lowest price I've got to. So you can see now, you can see what is happening. Market went to this price and then started buying. Buyer started buying. You get, so buyers buying now to show that market have gone into that price. It formed a wick. You can see it. So as they are pushing up, you can see the wick is already there. So mean that wherever market have got into already, there's wick inside that's formed. So if market move above, the wick will be there to show that price have got into that point, to that price. You get, so that market have moved to that price. So this one I already show that this is the highest point. This is the body of the candle, because this is the opening price. So that is where the body of the candle will always start. That is that mark the color of the candles form. So if the body move below the opening, it will be red. My own color is golden color. So if it's both buy, it will be white color in here, but your will be red or green. So if the body move above the opening price, it will be green. If you move below, it will be red. So that is just it. I hope you guys understand this. Maybe you can watch the video over again to get it clearly. And thank you guys for watching. I'll see you in the next video.